Check, 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 check. Can y'all hear me now? Check, 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 check. Can... Okay, we in the game.
You
We in
asking
the
now? Or
game.
that was tape?
That was YouTube. I was asking YouTube, but
Oh.
I was testing YouTube. All right, all right, all right. Boy, I tell you, boy. Hey, I get the feds watching. I guess the feds watching. Good evening, to everybody in the Discord. Shout out, Deborah. Shout out Jim. Shout out Kim. Shout out Lorraine. Oh, I just noticed Lorraine got her Sunday's best on. Lorraine got on her Communion Sunday white uh church mother hat with the girl you better stop trying me dress on in the thumbnail. I just noticed that. I just noticed. Okay, Lorraine, I see you. Shout out Lump. Shout out Trader Mo. Shout out Yolanda. Um, Let me see. We got Here to Learn and Share in the YouTube. We got Jennifer in the YouTube. We got Empire Tradings in the YouTube. We got Seawalk in the YouTube. What's happening, man? Y'all ain't ready for the Communion Sunday white. That's that lily white. That's that fleece is white as snow. You hear me? Hey, man. If this your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome, but give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am by some slither of my huge imagination, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just Big Spider if you don't hablo Espanol. And you are now in tune to another episode of the Intraday Price Action Recap. Yeah. What's going on, Tish? What's happening to Black Al Davis? Shout out to everybody pulling up in the YouTube, man. Hey, I jollipies for the technical difficulties. See Lorraine? Lorraine, hey man, you serving, hey, all my sins been washed away. That's what you serving in the thumbnail. You serving all my sins been washed away with the Communion Sunday lily white matching set on up there. I ain't never noticed that before. I just was like looking at the picture. I said, what? I said, what? Wait a minute. Got on that lily white on them. All right. Let me ask y'all a question, man. How come like the older ladies? Oh, that was birthday trip. Okay. I got you. And I just said that because I saw it look like a hat. But why do like the older ladies at church always wear hats? And then they don't even care if it be in your way. They keep that hat. They don't never take that hat off. They keep it on. They don't care if it be in the way. And like the older they get, the bigger it get. You know what I'm saying? Once they go over a certain age, they start wearing hats. And then like the older they get, the bigger the hat get. And they don't care if the hat be in your way. They be sitting there just nodding their head, and they had a fan. They had a fan. They sitting there like this right here, nodding their head, and that big old hat be in your way. You know what I'm saying? Do the hat equal rank? Do the size of the hat equal rank? How it work out? And then I said one of the younger sisters, she like my age. She like around my age. And I was like, why you don't be wearing hats? She like, I ain't no old lady. I ain't gonna be wearing no hats. Is it a certain age? Is it a certain age you got to get to before you start wearing hats? Is it a certain age? Rich, indeed it does. Indeed it does. It's like rank. This is a certain age you got to get to before you start wearing hats as a lady at church. What's the hat age buffer? What's the hat age buffer? Now, what if you raised by old women? Do you start wearing hats as a teenager? What's the... Hey, 70. Okay, yeah. Yeah, cause she was like, I ain't no old lady, I ain't gonna wear no hat. She was hot. I said, my bad. I'm sorry, I didn't know it was like an age restriction on hats. Alright. Hey man. Like I said, my name Timothy Rogers Sr. Man. We about to get into this intraday price action recap. I appreciate y'all. I appreciate how you know. How you know? You must have had a run in with somebody. They had to straighten you out. They had to straighten you out. Hey, I ain't even got my trading view open. Uh Let me get my trading view open. Oh, we got a little gap up there. Let me get this stuff out of the way. Hey, gang, y'all see that there? Y'all see that there? I've been testing this thing. Look at that. 0.5, right? Right, went to 0.5 after, you know what I'm saying? After the range was set, went to the 0.5 down there at a inversion fair value gap. Then it came back up, right? Stopped at the 0.5, right at the 350, and then finally going into 4 o'clock, it made its way back up to the 1 standard deviation away, right? So, and then we didn't get a retrace here. We just gapped up, continued up, gapped up to the today's new week opening gap, right? So now that's gonna give us a new week opening gap. That's gonna give us a new week opening gap right at the Oh, I guess I could have left that stuff on there. Let me leave that on there. I'll just set my new day opening. Nah, I'm in the middle of it now, so I'm gonna set it in my I've been trying to do my microphone a different way, and it's there you go. Let's do it like that. All right, we're gonna do it like that. So the mic will be close to my mouth, and I'll still be able to see the screen. So let me do this real quick, and we're gonna get into the price action recap. I'm gonna go ahead and set my new day opening gap here. And it came. God dog it. I tell you what I'm finna do. The one that was so far back, it was all the way back to 1119. I was gonna be sliding that forever.
Today the 13th.
I know, but a new day opening gap for the next day.
Okay.
Remember, it's the futures trading day starts at 6 p.m. It starts at 6 p.m., but it's for the following day. So the futures trading day start at 6. It close at 5 and open at 6, right? But the day that's opening at 6, right? You see out here, we come here and say like Monday 6:01, right? But if you go to the daily candle, it'll say Tuesday, right? It'll say 2 because that's Tuesday's candles that's starting. So that you date it for the day that it's going into for your new day opening gap and your new week opening gap. So now that we got that there, since we have a new week opening gap and a new day opening gap right there together. I ain't gonna worry about it now because I'm not gonna be watching the price right now, but I'm gonna turn one of them off tomorrow if everything's still kind of hanging in this area, because I don't like when they be doubled up like that. Okay, all right, let's get to it, man. We're gonna go to the 15 minuten. All right, let's see what the ES did today. Let's see what the ES did today. ES kind of looked like the ES kind of looked like the NQ. Not much difference. Let's look at all three of them together on 15-minute charts. YM on the top, ES in the middle, NQ on the bottom. All right. Yep. Okay. So, looking at all three of them, let's put it on 60-minute charts so we can get like some more information in there. Okay, so looking at the 60-minute chart, the Dow has taken out this high from Friday afternoon. Right, this Friday afternoon high right here, the Dow has taken it out. The NQ has not taken it out, and the ES has not taken it out. Right. So we got some bearish divergence there. Right, all of them have taken out the same low here. Right, this low from Friday afternoon, they all taken out that low. They're all below this low from the 20th of December. All right, so all of them are below the low from the 20th of December. Let's go to daily charts. All right, so looking at the daily charts, just looking at like the wicks. Okay, this is the 20 December low there. Then we come back, and we got the November 19th low, and the NQ has not taken that November 19th low, but the ES and the Dow have taken it, and the Dow has taken out this November the 4th low. All right, this low from November the 4th, the Dow has taken it out. The ES is really close to it right now. It has created a relative equal low, and then the NQ is nowhere near that low right there. So on a daily time frame, we got bullish divergence. Right, we got bullish divergence on the daily time frame. The Dow took out a old low. Right, the Dow took out an old low. The NQ is nowhere near that old low, and the ES right now has created relative equal lows, right, with a nice rejection off of it. And then the NQ has created relative equal lows to November 19th. The ES created relative equal lows to November 4th. The YM took out November 4th, but the NQ set relative equal lows to the 19th. So the NQ is showing more strength than the YM and the ES, right? As far as, the relative lows that it's trading into or unwilling to trade into. And that's on the daily time frame right now. All right. The YM has completed this huge market maker sell model right here when it went below that low. All right. The NQ again set a relative equal low in this market maker sell model. All right. Same huge market maker sell model. It set a relative equal low with a nice rejection. Right, make the candles big. I keep forgetting that. People be like, hey, god dog it, I restarted my computer. Y'all hold on while I restart my fancy dancy. All right. Okay, so right, relative equal lows in the ES. Right, just showing it on all the separate charts. Right. So the ES and the Dow both pushed toward the sell side that we were looking at, but then stopped and reversed. They put it in reverse, Terry. They stopped and reversed up. ES didn't reach that sell side, and NQ didn't reach that sell side. ES finished green on the day. NQ finished red on the day. Right? NQ finished red on the day. Dow finished really green on the day. Right? So as far as the day itself, short term, today, the Dow was the strongest and the NQ was the weakest. But as far as over time, the NQ, has been showing the most strength. And that's where we're getting our bullish divergence from. These lows right here, these relative equal lows. Right? Because that low on the YM is way up there. All right. And that's not what's causing the divergence. This is what's causing the divergence. Not taking the same relative equal low on all three indexes. Okay. What y'all want to look at? Y'all want to look at the ES or the NQ? If you want to look at the NQ, put a 1 in the chat. If you want to look at the ES, put a 2 in the chat. One, two, three, 4, 5, 6. All right, NQ. NQ it is. Ones have it. I see more numbers than I see votes, but from the people who voted, ones have it. All right, so let's go here. Let's take off what's happening right now. We don't need that in there. All right, so as we opened up today, we had a bullish gap up, right? We had a bullish gap up with a new week opening gap. We closed Friday here at 20,997 3/4, right? And then we opened up here at 21,027.50, right? So gave us a bullish new week opening gap. Anyone who don't know what the new week opening gap is, the new week opening gap is the difference between the futures close at 5 p.m. on Friday and the futures open at 6 p.m. on Sunday. That's your new week opening gap from Friday to Sunday, right? New day opening gap is from day to day, right? From the 5 p.m. close on, just say Monday, to the 6 p.m. Open on Monday. And then 5 p.m. close on Tuesday and the 6 p.m. open on Tuesday. That's the new day opening gap, right? Because the futures trade 23 hours a day. It halt for an hour. And the difference between the closing price and the opening price during that halt gives you your new day / new week opening gap. So we had a bullish new week opening gap of 29.75 points. All right. Let's go down to the 15 minute and check out what price did today. All right, so just like I said before, this was, well, before I get into that, this was Friday's high and Friday's low. All right, Friday's high, Friday's low. We were anticipating price to trade down toward, I can't squeeze the chart up enough. Yes, I can. Trade down to this sell side liquidity right here, which is annotated by this red line right down there. Was anticipating price to trade down toward that based off of the sale program that price has been in, right? During this retracement, the weekly was in a buy program, but we was anticipating a retracement back down, right? The daily was in a sale program, and everything below that was pretty much in a sale program. All right, so we was anticipating it to possibly draw to that low right there. That's that low. Well, that's the relative low to what the Dow took out, right? And the ES got close to also. So that's the low we were looking at. Price open here. That's the new day. I mean, the new week opening gap. Like we said, we closed here on Friday, opened there on Sunday, right? Once we opened up, price pretty much just traded down. Didn't give an opportunity to try to even go up and engage with any type of buy side right there. Didn't even try to go back up and interact with this. I think that's a, what is that? Bullish weekly fair value gap. All right, so if we go to the weekly time frame, right, we see here that we closed below that weekly fair value gap, right? So right now, this is an inversion fair value gap. If you are in the mind frame that the market wants lower prices, you will want to see this used as resistance to continue lower. If you are in the mind frame that the market wants higher prices because we've gotten our retracement back down into the levels that we talked about already, no need to repeat those, then you will want to see price push through this inversion fair value gap on a weekly basis, right? You want to see it push through it, get a closure at least above consequent encroachment, preferably above the high of it, and then continue to proceed toward that high right there if you are bullish. Now, the way the week is starting off, right? It's starting off in the way that I like to see a bullish week start off. We traded down on a Monday, right? We traded down on a Monday. I like to see bullish weeks start off like that, right? That lends to the weekly retracing back down into bullish PD arrays, using them as support to continue up. It's just Monday. We got a lot of news this week, so hold on to your horses. This is just one signature that has played out thus far, right? Once we traded down on Monday, right? Anytime I'm bullish, I want to see it open and then go down, and then give an opportunity, show a willingness to go higher, and then retrace, giving an opportunity to participate. That's how I like to see it. If I'm bearish, I want to see it go up, then show a willingness to go down, then retrace, give an opportunity to get involved and go. Right. Again, so when I'm bullish, open, down, show, opportunity, go. If I'm bearish, open, up, show, opportunity, go. My own personal trading style. On any time frame you see, price is fractal. All right, we came down to a new week opening gap down into a bullish order block, and we're also inside this reclaimed fair value gap and inversion fair value gap over here, right? And then AKA balanced price range, right? That's a balanced price range right there. So this is a weekly balanced price range, so we want to see what it looked like on the weekly. All that stuff we just looked at over there, we want to see what it looked like on the weekly. All right, daily time frame, we came down below yesterday's low, got a nice rejection off of it, and we have created a daily SIBI right here. All right, we've created a daily SIBI right there. In the sense of from Friday's high to what we created today, the low that we created today, right? This daily SIBI is in the premium of this price leg here. But in the sense, in the range of the latest area, right? Not counting this move down, but this is the start. This is the start of this little piece of price right there, right? That SIBI is in the discount of this move right here. So if this is all price wants to do as far as going down, even if it turned around and took this low out, if it doesn't want to keep going down, since this SIBI is in the discount of this move, then you would want to see price push through that and use it as an inversion, because it's a bearish fair value gap that's created in the discount of this range, right? And then you got a bearish fair value gap in the premium of the range up there, right? But again, it is in the discount of the most current piece of price action, right? The most current piece of price action, but that's only incorporating Friday and Monday. It's not taking last week into account. All right. Okie dokie. Now, let's go down to the 15 minute and look at what price did today. So we open up. Oh, excuse me. Right, we open up and started to drop. Right, as we dropped down, we didn't give much of an opportunity to retrace outside of a small move up here from 845 up into 915, 920. Traded back into that bearish fair value gap there. Then we came down and engaged the sell side liquidity resting at Friday's low. As we came down, before we made that retracement back up, we had came down into a new day opening gap from November 19th. Right. Once we hit that 15-minute fair value gap right there, and I believe that's when we created that. So that's on the 9 o'clock candle. So yeah, that's when we created that 60-minute fair value gap right there. All right. So when we traded back up to this 15-minute SIBI here, that 830 SIBI, we traded back up into it here at 915 on the 915 candle. That's when this 60-minute bearish fair value gap was created. So now we have a 60-minute bearish fair value gap and then a new week opening gap resting above price. Then we drop down and engage with the sell side. Once we engage with the sell side, consolidated there until midnight, right? This is our midnight open. Midnight open came in at 20,008. Hold on. Yeah, 20,897.50. Right? We hung out there around that area, and that's around Friday's low and that new day opening gap from October 19th. We talked about kind of consolidated there in that area from like 10:15 or so all the way up until 3 a.m. Right, 3 a.m. is the London Open. But right before we get into the London Open, right, we got our midnight open, dropped down, right? Dropped down, did not take out the sell side from that drop that started at 9:15 up to 10:15, did not take out the sell side, right? So now we got relative equal lows there on the 15-minute. We expanded up, came up into the 9:15 bearish order block, right? That was when we traded up into the 15-minute 8:30 bearish fair value gap and dropped. Then we traded back up into that 9:15 bearish order block and then created an inversion fair value gap here, coming back down on this 2 a.m. candle. Right, created an inversion fair value gap, coming back down on this 2 a.m. candle and a SIBI right there in line with the midnight opening price. Traded back up just above the midnight opening price, wicked off of it. Then at 3 a.m. on the London Open, we wicked up one more time above that high, right? Wicked up above that high and then displaced the weight, right? And you say, Tim, why did we wick up there twice, right? Algorithm do what it want to do, but it's certain signatures that we look for, right? So here we are on this 2. We dropped down here from 115 up to 215, right? We dropped down and set relative equal lows, right? And then at 245, we wicked up above midnight, okay? So as we're coming into a new day for the algorithm, right? We're still consolidating here. Then price does what? Manipulates up. Anytime we're going into a new anything, we just anticipate some form of manipulation. Do you always have to get manipulation? You don't always have to get manipulation, but you anticipate some form of manipulation because when you get that power of 3, accumulation, manipulation, and distribution, right, that gives you the best opportunities for setups, right? And as we're coming into the new day, right, we're consolidating coming into the new day. So you got this accumulation, right? And then we go up after the new day starts, okay? Go up. That's the manipulation, right? And then we come back down and retrace back up above midnight open, right? And into the bearish fair value gap that's right there with midnight open. But then what happens at 3 o'clock? Somebody unmute and tell me what happens at 3 a.m. Eastern Standard Time. What happens right there?
Looking like more manipulation. Is that a Judas swing or something?
But what happens at this time? What is 3 o'clock? The
Isn't it
London
London trading?
Open. The London Open. And what
Okay.
happens when we go into a new anything? What do we anticipate? Right. We anticipate
Expansion?
some type of what you said the first time.
Manipulation.
Yes, we're anticipating manipulation because we're moving into a new session. Yes. Right? When we came into the new day, we got manipulation. When we came into the new session, we got manipulation. We manipulated above the high and then took off. Because if price really wanted to just go down right
Damn,
here.
somebody echoing. We can't. It's echoing over you. Right. You know.
Oh, Seawalk, mute for me. You ain't had to leave. You ain't have to leave, Seawalk. Mute. All right, so oh yeah, we came into a new day. We got some manipulation, right? So once we retrace back up above midnight, right, that's bringing us back up into a premium bearish PD array, and it's above the midnight open. So that justifies getting short, right? But it's right here at a new session open. So when that session open, what does it do? It wicks up one more time, giving the London session the opportunity to get short above the midnight price, and it also took out a high right there. That wick, when it traded above that wick right there, that took somebody out. That's using like a lower time frame for something. But you notice it did not take out the high, the protected high. See what I'm saying? That's the protected high right there. It did not take it out. So we got the manipulation, left the high alone, and then took off. Right? So now, in the sense of the power of three, right? In the sense of the power of three coming into the beginning of the new trading day for the algorithm, we got our accumulation, manipulation, and then distribution down there, right? Because we was accumulating coming in. This is our area of accumulation right there. That whole of the area we have been consolidating in went up, right? Came back down, right? Once you come back down, then we traded back above the open, right? So above the open, below the open, back above the open, and then drop, right? Judas swing, retracement, delivery, accumulation, manipulation, distribution. Got it? Get it? Got it? Good. Okay. Came down and set a low, failed to reach the sell side. All right, traded back up into a prior new week opening gap, which is from October 18th. Right, traded back there, hung out there for a little while. Right, engineering some liquidity there. All right, so then we started to move up. We did get a little sweep of some short-term sell side, but it's kind of still in this whole little range right there. But you can count it. It's a little sweep of some short-term sell side. Then we pushed up. It failed. Did we get it? Nope, we did not get it. Right there. Failed to trade into the 15-minute SIBI right there. Right, but is that where we? Yes, it is. That's what we traded into a 60-minute SIBI right there. I think we talked about that this morning. That's why I jumped up here to check it, right? So we traded into a 60-minute SIBI. All right, go back down to the 15-minute. All right, so price expanded up, traded into a 60-minute SIBI, right? Came up, set relative equal highs here for internal liquidity, right? This is the highest high, and this is the lowest low after midnight, right? This is the highest high from like the overnight, right? The one that we just traded up into after the open, right? That's the highest high from the complete overnight, meaning from the start of the futures trading session, right? We just traded up into that on the open, on the 6 p.m. open this evening. But we traded up into the high after midnight, right? We traded up into the high after midnight. The high after midnight was the highest high, and then the low during the London was the lowest low, and we came up and set relative equal highs here, right? Creating, engineering more internal buy side liquidity. Traded back down, right? Did not take out the low, set relative equal lows, taking out the sell side, but not taking out the low. Okay, then we moved back up again, took out the relative equal highs or the internal, traded back down, did not take out the low, right? This low right here is being protected, right? Then we came back up again, traded up above the high one more time, closed above consequent encroachment of the bearish fair value gap, right? Next candle we wick up and go up into Friday's low, reprice this entire SIBI from 315 candle during London, right? Trades up, look like we trade up into the wick of this bearish order block. Don't look like we got the, yes, we didn't. We did not hit the body of it, but we traded up into the wick of this bearish order block here. That bearish order block is resting at 3 a.m. That's the 3 a.m. Order block from the London session. And then we trade back down below the new week opening gap. And again, we do not, that's a prior new week opening gap. Again, we do not take the low. Again, that low is being protected. All right. So during lunch, we trade back above the high, trade back above the wick of the bearish order block, and then we close above the new day opening gap from the 19th, and then we hang out here between that new day opening gap, consequent encroachment of the inversion fair value gap. Forgot to mention that we created inversion fair value gap here on this 1245 candle, because that's when that hourly candle closed. So now this is an inversion fair value gap. Then we're trading in between the inversion fair value gap and the bullish order block at 1230 and the midnight opening price, which is ping-ponging in between that. Right, we got a midnight opening price and a couple of the PD arrays here. Going into the afternoon session, starting at 1:30, we're still ping-ponging, trade down into the bullish order block from 1230, right? Start to move up. We're moving up without any displacement, but we expand higher above the high and set relative equal highs with the high from after midnight. Pull back into the range. Do not create a fair value gap. Hang out there for about another 45 minutes or so, and then at 3:45, price takes off. Right at the end of the day, price takes off with no opportunity to retrace. Created a SIBI on the 3:45 candle. The 4 o'clock candle kept trading up. 4:15 candle kept trading up. 4:30 just kind of hung out, and then the 4:45 candle, the last candle before the futures market closed, just kind of hung out on the top of this inversion 1 hour fair value gap. Right, and now we've already traded up and taken out the buy side from this range down. Right, and that is the intraday price action recap. Anybody got anything for me? Boot camp tonight. We're doing market maker models. I'm a wee bit tired. I didn't get no nap today. I'm a wee bit tired. Didn't get no nap today.
Hey, Tim, I had a very quick question.
Hey, how are you?
I'm good. How are you?
It's good.
Hold
on, Kashaya. Empire Trade says, where are we heading tomorrow? What's tomorrow's targets? Let us see if we can help Empire Trades.
Crystal ball time.
Let's see if we can help Empire Trades. Am I sharing my screen? Yes, I am. Oh, crystal ball. Oh, crystal ball. Empire Trading says, where are we heading tomorrow? Man, I don't know. I don't know where we going tomorrow. Where you going tomorrow? Are you going to Walmart? Are you going to Disney World? I don't know where we going tomorrow. But look at that price. Look at that price, what Price has done, right? Based off what Price is doing. Okay. We have we got lose tomorrow. They can use it to manipulate. I think PPI tomorrow. I think CPI is Wednesday. Let's check the economic calendar. All right. Got a whole lot of stuff going on. All right. So we got. Don't forget your question, Kashaya. You know what? I'll get back to this in a minute. What's your question, Kashaya?
Okay. It's about like PD arrays. When you're highlighting PD arrays that are very far left, so like where we're sitting now, I guess we're looking at November.
Mm-hmm.
Do you still look at the continuous? Sorry, do you look at the single like contracts?
Yep.
Or do you look at the continuous contract?
I always look at the.
Okay.
I always look
Go
at the
ahead.
front month.
Okay. Because on I think it's on the NQ2, like around, let me see, like November 4th, November 5th on the daily time frame. There's, I think either on the continuous there's a void, and then on the monthly one there's not a void, or vice versa, either or. So I just want to know which one you looked at, but you said the monthly one, right?
Oh yeah, I always look at the front month. And you said
Okay.
November. You said November 2nd.
Like 4th there, yeah, at those lows. See, like how there's a void at the bottom.
You said talk about the volume imbalance here.
So yeah, sorry, volume imbalance.
Oh, here. Talk about the volume imbalance there.
Yeah, but on the continuous, I don't think there is one.
Yeah. Nah, the candle's different. Yeah, the candle's different. Now let me look at it without putting it in the panel, cause sometimes it be showing different when it's in the panel. Whoa, got a lot going on. Yeah, the candles are different. Yes, on the continuous contract. Yeah, but I always look at the front month. I always look at the front month, and when it comes to PD arrays, right? When it comes to PD arrays, when you're looking at price, when you're looking at, let me get me a, what's the name here? Today's the 14th. Go clickety click, click, click. All right. And I drag this back here. All right. So you have, you got ranges that you put the priority on. Okay. So if the seeks liquidity and PD arrays, right, in ranges like this right here. Okay. You got the 20-day, 40-day, 60-day, right? So it seeks liquidity in ranges like this right here. So when it comes to price and marking PD arrays, you want to be placing the emphasis on the PD arrays in the most current price action first, right? And then once you get to an area like below these lows, right? And then you're looking over here, that's when you want to start focusing on PD arrays that's farther back than the most current price action, right? Because IPTA will look back up to 60 days back for PD arrays and liquidity and stuff like that. Right? Anything that's farther back than this right here, I ain't even wasting my time even looking at it unless we just coming down to just like a old low or a old high that's way back over here. I'm not looking like way back over here at a fair value gap or anything like that, because we got too many new ones over here in price. I understand, you know what I'm saying, Mike say my PD arrays never go stale, but price gives you so many new signatures, so I'm not going to be looking for a fair value gap that's way back over here when I got good fair value gaps I could be looking at in more current price. You understand what I'm saying? But I always watch the front month, and you know if you want to watch the continuous contract, that's fine, but I don't look at the continuous contract unless I'm trying to look at old price action that's way back here and all this spotty stuff on the front month. Right? Because the front month, see how it's all spotty back there, the price is all spotty, so I can't see any clean price action during that time. So then I'll look at the continuous contract just so I can go back and study old price moves. But and the only reason why I look at the front month is because this is the active contract that everybody's actually trading, right? When you know what I'm saying, all the buying and selling is happening inside the front month contract. I know some platforms, they just have like one contract that just go on forever, right? But whenever you're like, just like in Ninja Trader, it, you know what I'm saying, it's like it's time to roll over, right? And it goes to the new contract, but when you look at the data just go back for like ever. It's like it looked like it's a continuous contract, but it rolls over to the new contract. You know what I'm saying?
Yeah, thank you. I just so happened to switch to the continuous one, and I seen that there was a difference, so I just wanted to know which one you used. But thank you.
Stop overthinking.
Oh, I do. I have a second.
Stop overthinking everything.
No, I wasn't even overthinking.
I see a volume imbalance. I see a volume imbalance on them, but I don't see no volume imbalance on that one over there. Now I don't know. And do that make a difference? Should I do? Should I look at it? Should I stand on my left foot and hold up my right hand? You know what I'm saying? Stop overthinking everything. What's your follow-up question?
You mentioned that CPI and FOMC. I think you said like the days before, price can move funny. Mm-hmm. Is it so for CPI, is it all the days leading up to it, or would it just be the very first day, if that makes sense? Like month, for example, today and tomorrow, or it would just be like tomorrow?
Since we got news tomorrow, then it's hard to say. But like typically when it's like big news coming up and you got when you got CPI coming up and you ain't got no news in front of CPI, then like that day before would kind of be like kind of blah. You know what I'm saying? It'll be kind of high resistance. Kind of like how today was during the New York session, how we just was like we kept just ranging. Like we didn't go down. It's like we kept ranging like for like the whole day, right? Like we had a good price move down, right? From Asian all the way down to the London. And then once we got to the London, we just started coming back into the range and then just stayed there, right, for the rest of the day until after 12. And then we moved back up right around midnight and then hung out right there at midnight, right? And midnight, that's like the opening price right there. So you see, we consolidated around midnight and then we consolidated around midnight again. Right. So you see right here, you can look right there and say this midnight price right there is the price that the algorithm was considering a fair value. Right. Because we consolidated around that same price before the day started. And we consolidated around that price going into the end of the day. Right. We dipped down, came back up to that price, hung out there. Then right at the end of the day, we started to move away from that area there, right? And when we was moving away from that area, right, the only thing we did was now we're starting to move back to the fair value of the range prior to today, which was Friday, right? We're just moving like we came to an area that the algorithm was seeing as fair value, right? And then now we're moving back toward another area of fair value, right? So we'll see how that plays out. Right, because the algorithm likes to, before big news, it likes to kind of hang out in areas of fair value before the news drop. But since we got PPI tomorrow, that's a potential market mover. So we don't know how they're going to use that to manipulate price before CPI happens. You see what I'm saying?
Yeah, thank you.
Mm-hmm. So it ain't never no cut and dry, like this what it's gonna do exactly. It's all about what is price doing right now, what signatures is showing, and how can they use this news or the lack of news to manipulate the market, right? How can they use it to manipulate the market? And all of that comes with like a feel. It's like a feel of what it's doing. Now, back to what we were talking about when that was who was that? Empire Tradings, I think it was. All right, so right now, price, we said on the weekly time frame, right? On the weekly time frame, price has been bullish and it's been in a buy program, right? When we took out the buy side liquidity here, right, we were anticipating a retracement back into the range, right? So when you're in a buy program, you want to extend above highs, come back into the range, extend above highs, come back into the range, aka a trending market. Retail mindset says trending market. You're making higher highs and higher lows, right? You extend above highs, come back into the range. Extend above highs, come back into the range. Extend above highs, come back into the range, right? Trending market, higher highs, higher lows, okay? So on the weekly time frame, we're still in the buy program. Now we've come above highs, and now we've pulled back into the range, okay? We have come, right? We come from the low to the high of this last price leg right there. The last price leg inside this dealing range here, right? That dealing range consists of 1, 2, 3 price legs, right? This last price leg there, we've come back into the discount of the range. We've come back into a bullish breaker. We've come back into a bullish order block, right? We traded down here and kissed that bullish order block. This order block here is a propulsion block. That order block right there is a regular order block, right? We traded down, boop, into the order block, retrace back down to the order block right there, right? Right now, we're getting a reaction off of it, but this is a weekly chart, so we need to wait until Friday to see if price respects these. But you got a weekly balanced price range, a weekly bullish order block, weekly bullish breaker, a weekly bullish order block, right? So you got to wait until Friday to see if it respects these discount PD arrays. All right. On the daily time frame, right? We go to the daily time frame. The daily time frame has come down, right? It's broken into a sell program, which is to be expected because we wanted a retracement on the weekly. We've come down and now we've traded below, right? Sell side liquidity, right? Created a bearish fair value gap and got a nice wick off of it, right? Once you we came here, traded below the low, right? But then we dropped down, right? A little bit farther and traded below that low there, set relative equal lows, and we got bullish divergence down here, and then we get a nice rejection. All right. So now what you want to see, if, right, because we look here, we've offered buy side, sell side, buy side, sell side, buy side, sell side, and now we've left that area. Okay, we've left that area. So now if price wants that low right there, you want to see the algorithm treat, God dog it, you want to see the algorithm treat all this area right here as a balanced price range, right? Because we've offered buy side and sell side delivery, and we left that area. Okay, looking at the range from the high to the low of where we left that area, this SIBI is the premium imbalance that's responsible for sending price down. Okay, we grade it here. Let's check the top to see if there's a volume imbalance there. If there's a volume imbalance and the wick does not reach consequent encroachment, you want to include it. No volume imbalance is there, right? So we go from the low of that candle to the high of that candle. Then we grade it. Okay, quads, boom. Right now, we've come to the lower quadrant, and we're respecting it right now. Okay, so if the algorithm wants that sell side where we created relative equal lows, right, you want to see a healthy respect on the daily time frame of that, God dog, of that lower quadrant right there, and at the most consequent encroachment on a closing basis. You want to see daily candles closing below that lower quadrant and at the most below this consequent encroachment, right? If price got froggy, it's okay for it to wick up there, right? It's okay for it to wick up there, but you want to see closing basis, it respecting that. Now, coming down to a 4-hour chart, right? Looking at your 4-hour chart, we have, right, looking at the same range here, right? This is our, we're looking at the same range on the 4-hour time frame, right? We've traded up to a bearish order block, right? This bearish order block is inside that daily SIBI, right? So we've come up on the 4-hour back up into a bearish order block. On the way into this bearish order block, right, we have created a inversion fair value gap, right? So now the 4-hour, right, the 4-hour has switched to a buy program, right? The daily, right, the daily is still in a sell program, right? The daily is still in the sell program. The 4-hour has switched to a buy program, right? We got an inversion fair value gap there, which is to be expected because it's a bearish fair value gap that's in the discount of the move, right? We got an inversion fair value gap here, right, which is to be expected because it's a bearish fair value gap that's in the discount of the move. So switching to the buy program is to be expected, right? Why? Because on the daily, we have a bearish fair value gap in the premium of the move, and you would want a retracement back to this fair value gap. So in order to get that retracement back, then the lower time frame has to switch to a buy program to get back to that premium on the daily, right? So now what you want to be watching is, if now that price has reached this bearish fair value gap, right? Right now the bearish fair value gap is trying to do its job. Okay? What you don't want to see for the bearish um argument. You don't want to see this inversion fair value gap hold, right? You don't want to see that hold. You don't want to see price hit that and come back up. You don't want to make a high here, these 4-hour candles. So you don't want to make a 4-hour high, hit this and come back up, taking out the high and moving up. You don't want to see that, right? You do have a bearish fair value gap up there at the high of the SIBI, right? But if it's exceedingly bearish, you don't want to see this buy program holding up and pushing through this daily SIBI, because that daily SIBI is the only daily imbalance, right, that you have in this range that's responsible for taking price down, right? The only other imbalance above that is digging deeper up into this balanced price range right here. So if you start to dig deep into that balanced price range there, now it's showing more and more weakness, right? Because think about it logically. You got relative equal lows here, right? You set you're engineering sell side liquidity, right? You retrace back. Do you really want to retrace back? If you think, just think about it logically, do you really want to retrace back all the way up here? This fair value gap there is 700, just say 750 points. Do you really want to retrace back 750 points just to come back down and take out that sell side, right? That's showing like weakness on the bearish case to retrace all the way back up there, because you are coming from taking out external sell side and going back and taking out external buy side. When you go from external to external, that's showing a possibility of reversing. And in this case, you're going down. If you take out this buy side here, now you're showing that algorithm wants to go up, right? So you don't. So what you would be looking for, right? Whatever time frame you trade, I'm just going down to a 60 and going no higher than that, right? I mean, no lower than that, right? So on the 60-minute time frame here, the 60-minute is in a buy program also. So your 4-hour is in a buy program, your 60-minute is in a buy program, right? And under that is in a buy program. So everything from the 4-hour down is in a buy program right now, right? So now you are looking for, now the 60-minute, we've taken internal liquidity. 60-minute, we've taken internal liquidity. Now we're back in the premium of the move, right? You do have one more level of internal liquidity up here at the upper quadrant of that SIBI that's responsible for keeping price down. After that, the only thing we have is that bearish fair value gap right there. And then we have, if you look at it in the sense of that move there, you got a bearish breaker there, right? Up here at this upper quadrant. Okay. But again, that's getting pretty long in the tooth, right? Just to come back down and take that, which is not uncommon for high resistance liquidity runs, right? That's not deep retracements is not uncommon for high resistance liquidity runs. Okay. And if you remember, we said that the if we look at the equilibrium for Friday's range, we're there right now, right? We're at the equal. No, we're not. That's for this range that we created from since then. But if we just look at Friday's range, right? Equilibrium for Friday's range is right at the equilibrium of that daily fair value gap. But right now we're sitting at equilibrium for this entire range right now, the dealing range that we're looking at for this hourly time frame, right? So we're in the middle of the road on an hourly time frame. Okay, so since we got big news, right, coming up, right, me personally, I don't try to trade in front of big news. I wait for the news to happen, then I trade. So going into tomorrow, right, we got PPI, right? So let's just say price just hangs out at this equilibrium here all night until 8:30, right? If it hangs out at that equilibrium there all night until 8:30, right, then we know we got, this is our sell side down here of our range, right? This is our sell side for the range there, right? Up here, this is our, move out the way. This is our buy side for the range. I'll put another line there, just make it fat. I don't want to change my daily line, right? This is our buy side for the range, okay? And then this right here is internal buy side. And I'll make this a dashed line. All right. So if price just hung out here, if price just hung out there for the rest of the night, right here at equilibrium of the range, right? If it hung out here for the rest of the night at equilibrium of the range, now we got internal buy side resting right there, right? So once the news take off, right? If you're if I'm bearish and the news come in, I want to see them use the news to manipulate into this internal buy side right there. Boop, hit the internal buy side and then offer me something to get short. Manipulate the internal buy side, right? Hit that bearish breaker, hit that bearish fair value gap, and then turn around and offer me something to get short off of over here to target the lows, right? After the news come out, use the news to manipulate into it, and then give me something to get short off of. All right, because right now we don't have. I'm not interested in trying to buy back up to that high right there, right? I'm not interested in that. Why am I not interested in that? Because the higher time frame is in a sell program, right? The higher time frame is in a sell program, so we're retracing back into a daily fair value gap right now, right? We're retracing back into a daily fair value gap right now. So the only way I would be interested in going long into that high right there is if we continue to rise up here and then we take out that high and refuse to break back down, right? Then I will be looking for a reason to attack that high right there, right? I'll be looking for a reason to attack that high right there. Okay, because looking at what we got here, right? Looking at what we got here on the 5-minute time frame, if we take out that high there, right, then we could have a low resistance liquidity run into that high, right, coming off of this last area of distribution over here. Well, highest area, that'll be like an initial consolidation there, and then once we get here above that last area or the highest area of distribution, right, then it'll set up a low resistance liquidity run into the high. All right, so that's how I look at price. I'll never just sit down and be like, oh, this what's gonna happen, this is what's gonna happen. I look at the signatures that price got, look to see if we got any news coming up. If we got news coming up, I just sit on my hands until the news come out and see what's left on the plate. But if we ain't got no news coming up, then I formulate a plan of, okay, if price does this, then it should do that, and I'll be looking to engage at this area here. 728. Anybody got anything else? I got about 30 minutes, and then I got to get with the boot camp. and I'm hungry. Matter of fact, forget it. No matter if somebody got something, cause I'm hungry and I got to get with the boot camp in 30 minutes, and I feel like I'm about to faint. I got to get me something to eat. Hey, the question above. What question above? Empire Trades. I just went through your question from above. Oh, another concept. Oh, another question. ICT concepts. What usually happens when it gaps up tonight? Open 6 p.m. Do you usually go back down to fill it? Safe to say spy gaps. Safe to say gaps equal fair value gaps. I know there's no the new day opening gap is used. You use it to support your narrative. You use like any other PD array. I'm not a person who trades like gap percentages. Like, oh, 70% of the time it's gonna fill this new day opening gap. 70% of the time it's gonna fill this opening range gap. I don't trade gaps like that. I'm not a gap fill trader. So the way you use the PD arrays depend on the analysis that you're using. ICT concepts ain't really designed to trade based off of this gap is gonna fill. Is designed to say, hey, price has done this. This is the draw on liquidity, and these are no, it's not a fair value gap. It's a new day opening gap. It's not a fair value gap. It's a new day opening gap. A fair value gap is a 3 candle pattern where candles 1 and 3 don't share price. A new day opening gap is the difference between the 5 o'clock close and the 6 p.m. open. Two different things. All right, y'all. I got to go get me a snack before I jump on here with the boot camp. I appreciate y'all for hanging out with me. Tomorrow is Tuesday. I'll see y'all tomorrow again at 6 for another episode of the Price Session Recap. Again, Timothy Lee Rogers Sr., a.k.a. Grande. That's just Big Spot if you don't hablo es, man. Yo, y'all be safe out here in these straight streets, man.